Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. In today's upload, we're going to be taking a look at Bitcoin, what it did last week, and what we could potentially be looking for in the week to come. We did have a lot of high impact event risk last week. We still have a lot of that event risk on schedule for next week in the form of the FOMC meeting. We have a 50 basis point hike that is expected, but we have seen articles of other people expecting maybe now a 75 basis point hike based solely on the CPI number. We're going to go over all that in today's video, so make sure you stick around. All right, so first thing is first. Last week, we had the VIX pulled up. We were looking at support at $24.36. I have not changed this line in any way. This is the level that we were watching for support to happen. And just like that, boom, we got it. And it was a pretty decent spike to the upside. Now, this was on the last 2 days of the week. We had CPI on Friday. So this metric is important because it shows us when risk is coming back into the market. And also, a lot of people picking the bear market lows are in. They just don't understand what they are talking about. Typically, when you have your bear market lows, this asset will be at the highs. You'll be looking for resistance or looking for the blow off top to occur. That typically marks bear market lows, not a pullback into support. This marks continuation. You can actually see a trend occurring here to the upside. So now what we're going to be expecting is more bullish price action on this asset. If that occurs, we're going to see risk come off, and it could come off a lot more. Going over here to the VVIX, you can see that we were also watching monthly support at 88.92. This level also held. This is the volatility of the VIX. So this measure was coming off big time. Another thing that when you are at bear market lows, this asset will be at the highs. Since you're at the lows, even though prices already came off so much, that just says that, yeah, we could potentially see a lot more volatility to the downside if this asset continues to rise. Not a whole lot to say on Bitcoin today. Unfortunately, it's just as simple as that. If we come over here to the 2-week time frame, you're going to see that 2-week support did hold as resistance for the last 2-week sessions. That will put you at 4 weeks. You did hold as support. Last week was our first bullish close in 9 straight weeks. We had 9 straight bearish closes. On the 10th week, we had the first bullish close. It was a insignificant bullish close, to say the least, as you did put in an expansion, taking out the previous 2 weekly highs, then retracing back down to the open. Now, this weekly range did get below the weekly open for a second, but then on Sunday, you got a little bullish pop that had you closing bullish on the week. This week, we've seen a higher push up into 2-week resistance again, and then the expansion lower. Now, this main expansion lower has come in the last 2 days, really, because, the previous 3 days we were just trading sideways, waiting for the event risk to happen. Today, on a Saturday, we're getting continuation. Now, since we had the CPI print on Friday, I kind of wanted to wait until Monday to see how the CME futures market opens, to see if we get like a bullish engulfing or something like that, specifying that maybe this initial push lower was just going to be a fake out move. And it is still possible, but once again, we get into that likelihood of it being probable is very low, because we are seeing more downside continuation today. So tomorrow, even if we get a spike up into today's open, we're probably going to be looking to enter short positions there, because basically what I wanted to see is this weekend trade sideways inside of Friday's candle, but we're not getting that. We are getting bearish continuation on the Saturday. So, we're trading under the lowest daily support, guys. This isn't looking great for Bitcoin. Not looking good at all. If we go over here to the daily RSI, you're going to see 2 flawless 50 tests and then down. So, there is a ton of downside room that we could get on this thing, because this indicator is just now getting started to go back lower again. Remember what happened over here when we were trading under the 50. Everybody thought this was going to be the bear market low, except us. We shorted this bad boy. We knew it wasn't. Then we got this over here, and then boom, your expansion lower. So look at that move lower. You can get that big of a move lower again from where you currently are situated on the RSI. Now we do have our CME futures closed. It closed on Friday, and once again, you closed red on the week and you closed at weekly support. So there is a potential that if we keep seeing downside continuation today and tomorrow, that we have a gap down on Monday or Sunday night when the CME starts trading again. And if we do get that gap down, then, you know, that just means we're looking lower. Yeah, we could get a slight stab back up to the upside to fill any tiny gaps, but we're not trading gap fills here. We're just keeping an eye on where they happen. All right, coming over here to the BLX index. Let me get this off. I just drew up this chart this morning. The reason for me drawing up this chart is because I see these regression trend lines all over Twitter. Basically, all they've done is they've taken this swing low of March 2020 and tagged it to that swing low there, and basically looked to see how it played out on past price action. And to be fair, it does have a little bit of something going on down there. Now, the top end regression, or whatever you want to call it, the top end of the channel isn't so perfect, but it is a cloned trend line from this trend line. Simply what I did was took a pitchfork, went from, the swing low that I used was this swing low down here all the way back in August the 10th. That's just the swing low for the pitchfork that got it to line up with these clone trend lines, so we can get rid of them if we so choose. Now, I did also clone another trend line and tagged it to this swing high down here and this swing low right here. So this could potentially be an area where we're going to maybe look for that lower price. What we don't want to see is we don't want to see Bitcoin get under the last all-time high, because if it does, then that means it will be something new in Bitcoin's cycles, as Bitcoin in the past has never ever went back and retested an old all-time high. So looking for a bear market low, we could use something like this. Now, if I pull up the RSI, you're going to see that the last previous two bear market phases, basically the lows of the bear market, wasn't until the RSI pegged oversold. And this was in both bear markets, both previous bear markets. So 2017, 2014, those two bear markets both hit oversold regions, and that marked the bear market low. As you can see where we currently are, you are not oversold yet. Now, this lines up beautifully with the MVRVZ score metric that we've been looking at on Glassnode. So here is the MVRVZ score. This is basically market cap and realized cap, and that creates this orange oscillator. This orange oscillator in the entire history of Bitcoin has done pretty good of marking overvalued prices as well as undervalued prices. So each time you got into the green zone, that has typically been when you wanted to start to become a buyer. So here we are. We're trading above, setting in a near-term floor just above that overvalued region. Coming back over to price, you can see where you are on the RSI, just above oversold. So in this scenario, oversold would be similar to undervalued. So the RSI is another trend metric that is using a complete different mathematical formulation, but it's still coming to pretty much the same conclusion. So what I'm saying is, if you think this is the bear market low, please understand your risk. Futures open interest is ticking to the upside, even though we had a pretty decent down move this week. You can see open interest did not come off that much. The accumulation trend score is a new metric that we've been looking at. It shows us all the accumulation going on all exchanges, and you can see that when you're lighted up, that means you have a lot of accumulation going on. So basically what this means is, since we're not seeing any long liquidations, which we can see here on the futures long liquidations chart, that those people that are accumulating either A, has not had their stops hit yet, or B, their stops are much lower. So if price is sniffing out those stops, then we're going to see price head a lot lower. Then we'll start to see long liquidations spike. If that starts to occur, that's going to basically cause a long squeeze, if you will, instead of a short squeeze when price goes higher. A long squeeze is when all these positions start getting closed by the brokerages and exchanges, and that will cause a lot more selling to come into the market as price is going lower. Becomes a domino effect, if you will. So all of this data, along with the BLX, along with other things that we looked at in this video, you can see that most signs are pointing to looking for more downside. All right, now for the payoff. What are we looking for? What are our targets. Well, first and foremost, this swing low was going to be a bear market target, but you're really close to hitting that. So I guess there's not much of an opportunity there. But now what we can do is we can aim for this secondary target of $25,338. It's a pretty long way to go, but as long as weekly resistance is holding on a weekly closing basis, I will be looking to short any pops in price. So me looking for long prices, looking for prices to get up into monthly support to enter a longer term downside trade, doesn't look like it's going to be playing out. So what we're going to do is we're going to wait and look to basically take any bearish entries that we can on any push up in price as long as resistance is holding. And finally, going out to the 3-day, if I do this right here, this will be the first area to look for potential support if we do indeed break down below this wick low. Now, $23,000 is getting very dangerously close to being back at Bitcoin's old all-time high breakout. And using the cycle models or using the BLX index, you can see that Bitcoin has never ever tested an old all-time high once that all-time high was put in and the bear market cycle ensued. Then you got your halving and then a new bull market phase. So we have a halving coming up in 2024. There's a lot of time from now until then that price could chop around from above $20,000 to, below $35,000. So there's like a $10,000 range here, $15,000 range here, that price could just continuously chop around in for the next several months. So we're basically going to be treating this like any other range bound trading scenario. As long as the Fed is going to remain hawkish, then we know rate hikes are coming. Rate hikes are typically bearish for risk. I mean, it's just all the macroeconomic data that we have sifted our hands through, with housing markets rising, prices, just everything, oil screaming to the top, inflation still moving higher, food, wheat, all these things spiking. So we're going to look for downside price action on Bitcoin, targeting $25,338 as a primary target. Secondary target being $23,849 being old 3-day resistance. But we will be looking to sell into a resistance area if we get another test. All right. Hopefully this video helps. If it did, make sure you smash that like button for me. If you're new to the channel, maybe subscribe. Thank you guys for your time. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.